Hello and welcome to How to Trade the Santa Claus Rally on Indices with Dow Jones and the S&P 500 using binary options this evening, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Tonight, during the live session, we are going to cover live technical analysis and commentary. We'll be looking at the live trading indices this evening. We'll be looking at some precision trade setups. We'll be also having a look at some correlations within the markets that we're seeing right now as well as going through some tips for trading for profits moving in to towards November, the end of November and into December, of course, on the indices. So why we trade binary options? Well, essentially, you can make money regardless of whether the price of commodities, indices move up, down, or sideways. You can make money from a low deposit. All the profit you make is 100% tax-free, and you can make money very simply at any time from anywhere in the world that suits you. So before we crack on, guys, just very briefly, a little bit about myself and Nick who run the Gold and Silver Club. So I'm Phil Carr, professional trainer, and speaker. I'm the co-founder director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, the commodity currencies. But at this time of year, we always take advantage of the Santa Rally with indices. I've also trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also, a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me on the call is Nick Kelsey, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's just a bit of background, guys, on the Gold and Silver Club. So tonight's main topic this evening. So we're going to be looking at the Santa Rally. We'll look at indices. We'll look at the correlations. We'll see if there's any live trades lining up at the moment or what you want to be looking out for. So what is the Santa Claus Rally? Well, the Santa Claus Rally is a rise in stock prices in the month of December. So it's generally seen over the final weeks of trading prior to the new year. The rally is generally a combination of injection of fresh funds into the market and traders taking additional trades, which must be done for accounting and tax reasons, be completed by the end of the year. So a Santa Claus Rally is when the stock market rallies during the month of December. So it's usually in the last week of the month. So that is between Christmas and New Year's Day. There are a lot of explanations for why this occurs. You may have seen it previously. I'm going to show you some historical charts. But the main reason is down to something known as the January effect. And the January effect relates to the result of people buying stocks and indices in anticipation of the rise in stock prices during the month of January. So that is what the January effect is when there's a lot of buying which occurs at the end of December. So typically you will see traders might be selling indices or selling stocks during the month of December, only to buy them back again for tax purposes at the beginning of January. So as well as tax considerations, other explanations are the happiness around Wall Street during this time of year, people investing their Christmas, the bonuses they get at Christmas, and the fact that the pessimists are usually on vacation this time of year. So we do see often some a rally, and I'll show you that on the charts. Before we do that, I also want to cover today's fundamentals. So we have had some news today. So the news today, Janet Yellen kicked off a rally today, actually. It's good timing for this webinar because we've had a big rally just this afternoon in the indices after the FOMC, the minutes were released yesterday. We saw the indices plummet and they've just rallied back again. So US equities edged higher on Thursday after the Banking Committee of the Senate voted for Janet Yellen to be the next Federal Reserve Chair. Senate Banking Committee voted 14-8 in favor of the nomination of Janet Yellen for the next Fed chair. Being regarded as dovish, stock market jumped right after the news. So we had a big surge this afternoon. The Standard & Poor's 500 index jumped 0.63% to 1,792, while the Dow Jones rose 0.56%, standing at 15,989. And the S&P 500 and Dow Jones typically see their largest gains of the year in December and into January as well, thanks to surge. Of course, the Santa Claus Rally. So since 1929, the S&P 500 has averaged a 1.5% return in December, with markets posting positive returns more than 70% of the time, so high probability. The only other month with 1.5% average return is July, with the remaining months averaging gains of minus 1.1 to 1.2%. December is also tied for the highest average monthly gain for the Dow Jones. So from 1912 to 2012, December has averaged 1.32% gain, tied with April. So other month averages range from minus 0.88 to 1.28. So the biggest market jump is normally seen in the last 5 trading days of the year. So that correlates with the selling that we can sometimes see during December and the buying back towards the end of the year, just before January, for the January effect, which is how the rally became associated with Santa and known as the Santa Rally. So let's have a look at the seasonality. So this is the seasonality of the Dow Jones over the last 30 years. So you can see where we are at the moment. We've actually just had that dip yesterday around the minutes from the FOMC. So we are here, and this is what it looks like in terms of the last 30 years of the Dow Jones. This is where the rally normally occurs. So we can start really seeing that kick off just before Thanksgiving. So Thanksgiving this year is next week. It's on the 28th. So actually it's from next Thursday onwards. So it's a good time to start to look at, particularly if we're going to get a breakout, to look at some potential buys here going into the beginning of January for the Dow Jones and the S&P 500, even the FTSE as well. So the Dow Jones, this is where we are right now. And let me show you. So that's the seasonality chart. Okay, you might think, okay, well, that's just past performance. Well, let's look at the chart right now. Well, this is the seasonality chart right now, just taken about 10 minutes before we've actually joined this webinar. So we are here right now. So in fact, I'll go back again. So just take note of this slide. And then let's go back to here. So this is where we are right now. So we are just breaking out to 2013 highs. So we normally hit the highs of the year around the end of November, and then we break out. We have these large moves to the upside. And the fundamentals with Janet Yellen here being just going, let's have a look, voted for to be the next Federal Reserve Chair, now 14-8 in favor of the nomination. That sent markets rallying. So that is on the fundamental side more. It's going to give us more strength to this upside rally here. So let's have a look again. This is where we are, Dow Jones at the moment. So we are right here, end of November. Well, third week of November, and we're hitting 2013 highs at the moment. We're just about to break. So some very good potential longer-term opportunities here. So to be in trades over the next probably about 6 weeks or so to the upside. So Dow Jones, this is the S&P 500 here. So typically we get a Santa rally moving into December as well. So you might see a little bit of a dip at the beginning of December, and then we tend to get a strong rally into the end of the year here as well. Okay, and I also just wanted to cover gold. We will take a look, of course, of just quickly commodities too. We'll look at indices first, and we'll see if there's anything interesting on commodities. So you can see here the next important announcement is going to be mid-December. The 18th of December actually is going to be the next FOMC announcement. What have we got coming up soon? Well, we've got Thanksgiving next Thursday. Then we have Black Friday when all the sales happen in America. Then we have Cyber Monday when you get all the online sales. So these can cause a lot of buying as well in the markets. Then we're going to be moving into obviously the holiday season and up to Christmas Day. So that's seasonality at the moment. And where we are right now with gold seasonality, you can see we actually had some really nice short positions just on yesterday, which hit a major level, 1239, just today. So we have followed through in typical fashion, hitting a bottom around about mid-November here. So this is where we are on gold at the moment. We're at quite an important level. If we take out 1235 and 1230 level, we could be heading a lot lower. But seasonality-wise, what we tend to see, gold is slightly different. So this is each November, just going back the last 3 years. Typically, at the end of November, we do see a rally. So we normally, from this point onwards, we're about into about the third week now, we do normally get a rally here. So we see if we get some support. However, December is normally, it's not the same as the indices. We normally get a bearish move in December towards the beginning, up until the last week. And again, you get the January effect again. You typically, the gains, if we go back to the seasonality chart, in January here, we normally get some big spikes to the upside over the month of January. And this is due to a lot of selling which occurs at the end of the year, a lot of profit taking which occurs at the end of the year, and then buying back at a better price at the end of December or in January. So that's something to watch on the gold markets too. So we'll take a look at that as well. We're going to be looking very simply at rise full trades on Binary.com. So if you select rises, you win the payout if the market exit price is strictly higher than the entry price. If you select falls, you win the payout if the market exit price is strictly lower than the entry price. We're mainly going to be looking at the rises tonight because we're going to be looking at some potential trade opportunities here. So with that, I'm just going to move on to my live charts. I'm going to take a look at the Dow Jones, the S&P. I also want to have a look at some correlations as well. So we'll have a look at some correlations in markets too. So let me just get everything ready for you. So we will take a look, first of all, at the Dow Jones here. I know you can't see my screens right now. I'm just going to bring that up very shortly for you. Bear with me. Have an important level now to get above here, 1,005. Let's just move that ever so slightly, 1,509.991. So if we get above 1,600, that's going to be psychologically an important level to start getting a lot of longs interested in this market. And you can see every time we're coming down and testing this moving average, we're not closing below it. It's been like this since mid-October. We've had such a strong run here on the Dow Jones. Also, the FTSE, obviously S&P is correlated as well. The FTSE is quite strongly correlated to the Dow as well. Let me just show you that on a correlation chart. Okay, so let's just change. This is the we've just got overlaid here the FTSE and the Dow Jones. Let's just make it a little bit clearer for you. Okay, so the Dow Jones is marked here with the candlesticks, and the FTSE is marked with a black line there. So the Dow Jones here does seem to be leading the way. We had another look like yesterday it might turn after the FOMC, the minutes were announced. However, it found strong support today when Janet Yellen got the majority vote to be the next chairman of the Fed, and you can see that's just giving a lot of support. So we might get some strong support here with the FTSE too. So I would look at a couple of things here. First of all, with the Dow Jones, if we break above 15991, we're going to see a lot of buying pressure around this level now. A lot of pending orders are going to start getting set here by institutional traders. So if we do get a break above there, we will probably get a spike above. So I'll be definitely looking at that level 15991 for a breakout above this level. We've had such a strong surge today. You can see we're coming right back up to that resistance level. That's more of a day trade or a shorter term trade. If you want to go for the longer play here, you are going to be going for a trade. It's pretty much around this point, 21st of November is usually when we'd be looking. You can wait for a bit of a pullback if you want. We got that yesterday, offered a better price, but really you're looking to be in and out of this trade and out of it by the first week of January. So I'm going to just I'm going to have a look at this for you. So we're going to go to start time now, and we are going to go to Friday. Let's just get best price. Let's just have a look. So that's 43 days from now. So we're going to go Friday the 3rd. In fact, I'd like to go a little bit further out than that. and go to the 10th, just to give the January effect some opportunity to really get going, because not everybody's going to be back that week. So Friday the 10th, 50 days out. Okay, and we're going to be going in, let's do 4,000 here. Okay, so the pretty good payout, 79%. So you can see, in fact, the return is 100, over 100% for falls and less for rises, because it's more likely the market is going to rise from here. We look like we're going to break out. So I'm just going to do start time now, get best price. Wall Street, just check we're on the right index here, Wall Street. Yep, it's good. Let's get best price again. We're going to take that to £2,239 for the price to be higher in 50 days time. So, and I'm going to just purchase that contract. Good. So that has been executed on the Dow Jones there. I mean, you can take your pick really, whether you want to do it the S&P. The FTSE is looking pretty good from here. You can see the FTSE is actually at a better price. So I do like the FTSE as well here. So I'm actually going to go for a longer term trade on the FTSE as well. Obviously, I won't know until 50 days time if this is just going to be a trade that's going to be running in the background here. FTSE is going to be closed, isn't it? After half. Well, let's see if we can. We've got about another. You've got about another hour and 40 minutes to place trades on the US markets, but it's not a problem. You can trade. This is a longer term trade, so you can still take it on the UK market, of course. Tomorrow, let's see if we get a price here for tomorrow. Oh, you've got to do it in hours, haven't you? We'll have to wait now because the FTSE is actually closed now, but that's not a problem. You can still take that trade tomorrow. We'll look at the S&P, because the S&P is pretty much going to do the same thing. So you would either pick to go heavy on the Dow Jones or heavy on the S&P, or split your risk between both of those markets. So this is a longer term trade which you can take at the moment. There will be day trades here as well. Here's the S&P 500. Very high likelihood of this also doing exactly the same. If you want to just mix it up a bit, you just change the date slightly. So just in case we have some outrageous news of some kind on the 9th, on the 10th here, you could do it to the 9th, Thursday the 9th. And we'd be doing, again, going for the same risk there. So 2,258, payout 4,000 and 49 days time. Okay, good. So that contract has been purchased as well. So those are the longer term trade setups you can take advantage of the Santa Rally, of seasonality, which we're going to get at the moment. We really start see things picking up and getting to the next level from after Thanksgiving, and then moving into December, and then certainly from January as well. So we'll see if we start to get breakouts. If you are more of a day trader and you don't really want to hold long positions like that, or you're not really patient enough to wait 50 days for a payout, of course you can day trade the break of here. Once we break out of 1,599, 15991, that's going to create a lot of pressure at that level here on the Dow Jones. Okay, so here we go. That's what we're looking at here. This box. We're looking for a breakout. So if you're short the Dow Jones, where are you going to put your stop loss? Here. So if the market rallies, we'll probably see a blip to the upside here. We'll see some sort of a move up, even if it's just a very short-term blip, just because 1, 2, 3, 4 days of that resistance, we should see a nice, I'll try and make it a little bit clearer for you, a nice solid move here. So we see something along these lines, a blip to the upside. Just fill that in for you. Something like that, a nice strong candle to the upside, that would be a breakout, and we'll probably see a lot of any shorts in this market will get stopped out if we get a move higher here. So I'll definitely be keeping an eye on that level on the Dow Jones at the moment. Sorry, on the, that's the Dow Jones. Looking at the other indices, I mean, I would just focus really on the Dow Jones, the S&P, and the FTSE. Those are the strongest correlated out of those three. The UK FTSE is the one which is suffering the most. It doesn't get as strong impact from the January effect as the Dow Jones and the S&P 500, but it will still be correlated because these markets are very strongly correlated anyway. And I will just quickly take a look at gold for you. Okay, so we'll also, so that's what we're looking at in terms of the January effect on the gold. So we'll just take a look at what we might have here on gold at the moment too. Obviously, that's very tradable on better markets as well. We've had some really good sell shorts. I'll just go into the daily here. We've done some damage recently on gold, but I'm waiting to see if we're going to get that move. Really, we want to break above 1251 if we're going to get a move into for this last leg of November here as well. So we're going to be monitoring that at the moment on this 4-hour time frame as well, and see if we're going to get some breakouts to the upside here. We're not going to take any trades on that at the moment. However, we will be monitoring this, and we can cover it in tomorrow's Commodity Corner. So if you've not been on our Commodity Corner before, make sure you join us tomorrow at 12:30, because we always get a lot of activity on Fridays on the commodities. So here's the box that's developing. Got some key fib levels either way. So break above 2051 or break below 2035. We're going to see some strong movement here on gold. So we'll take a look at that tomorrow as well. And seasonality-wise, we will be covering each week as gold develops on the market. So we'll see whether we get that December sell-off, and then we start seeing some big opportunities towards the end of December for a January effect, a January rally, as we normally get in the commodities. Okay, so let me just take you back to the main presentation, guys. And actually, before I do that, no, let's actually talk about a few of these correlations here as well. So first of all, we do at the moment, I'm just going to give you another market which you would also is worthy paying attention to at the moment with the Dow Jones here. And that is going to be the US dollar index. That's the other market to have keep an eye on at the moment. So for those of you who join our Commodities Corner, you'll know we follow the US dollar index very much on a day-to-day basis for our correlations with the commodities markets. At the moment, the US dollar index more recently has been very strongly, we can see the correlations there for yourself on the charts here, where we've got strong correlations with the US dollar index and Dow Jones as well, which you can also put on the 4-hour there just to monitor the correlations. So any news which is going to be impactful for the US dollar index will also, of course, be impactful for the Dow Jones as well and for the S&P 500. I think that's probably something actually we might cover in more detail on tomorrow's Commodity Corner for some of the commodities as well. But you do definitely want to be aware of these inverse correlations if you are trading on the tighter time frame, if you're going to be day trading. So with that, guys, we'll bring it back to the main presentation. And of course, just a recap for you there. So if you, for those sort of trades that we're looking at just the rises there because we're looking to take advantage of a rally as opposed to a fall. Of course, if you're looking to do the opposite and you're looking for a fall, I mean, on the indices, the best months to be shorting are normally October. Typically, every stock market crash that has occurred between the months of September and October. Going back, you can go back on the charts and you can take a look at that, where we've seen a lot of big moves down, but a good time of year to be obviously long is from now until January. Okay, and for those of you who've never received this before, this is worth taking advantage of. If it's your first time on one of our webinars, good to see some new faces, good to see lots of familiar faces here as well. So if it is your first time, do just take advantage of this. You'll get $20 or £20 trading credit for your binary.com account. So it's just very simply use the bonus code 11121F20 and binary.com will take care of you and make sure that you get your £20 to start off your trading with. So just go to binary.com, select sign up, open real money account, enter bonus code 11121F20 and you can receive that. For those of you who would like to take it to the next level and find out more about the Gold and Silver Club exclusive live trading room program that we have, as well as the Gold and Silver Club one-day masterclass, and find out more about how to get involved in our exclusive international traders community. We're actually running an international trading competition at the moment at the Gold and Silver Club. which is absolutely fantastic to see everybody making a lot of money and a lot of setups being posted and a lot of interaction. So if you'd like to get involved, find out more, there's so many opportunities to trade pretty much to finish the year strong here, 21st of November. You know, there's so many more opportunities between now and Christmas. So hopefully we've given you a bit of a glimpse of what you can see just on the indices. So if you'd like to find out more, you can do that. Obviously, request information just at www.jointhegoldensilverclub.com. You can get in touch with us at London, New York, or Johannesburg offices. So 0207 193 0403 for London, +1 646 828 0403 for New York, and +27 11 083 8403 for Johannesburg. And do make sure, if you are around tomorrow at 12:30 GMT, join us for Commodities Corner as well, and we'll cover the latest and greatest in the commodities markets too. So we'll be looking at natural gas, copper, we'll be looking at oil, gold, and silver, as well as the commodity currencies. So if you can make that, do put that in the diary too. And here's more information about how you can actually fill in that form. Just join the goldensilverclub.com to find out more information. And of course, subscribe to our weekly newsletter. So for free weekly gold, silver, oil, commodity currency news, live market analysis, and prices. Okay. Well, guys, that is a wrap for this evening, and we'll definitely catch you on the next one, hopefully on Commodities Corner tomorrow. So take care. Good luck with your trades. Good luck with the indices, and we'll see you on the next one. Okay? Take care, guys. Bye-bye.